Right now, there are pensioners across the UK who are owed thousands of pounds they don't know about. The money is sitting there, unclaimed, because of errors made decades ago that were never corrected. And today, some of that money is finally arriving in bank accounts. If you were born before 1961 and you're on the UK state pension, this directly affects you. So stay with me, because in the next 10 minutes, I'm going to tell you exactly what's happening, why some people are seeing larger payments than usual, and more importantly, what to do if you haven't received anything extra, but you suspect you should have. No panic, no rush, no pressure. Just the facts, clearly explained so you can make an informed decision about your own money. To understand why some people are receiving extra money this week, you need to know a little background. Bear with me. This part matters. The UK has two state pension systems. The old system, which applies to people who reached pension age before April 2016, and the new flat rate system, which applies to people who reached pension age after that date. If you were born before 1961, you almost certainly reached pension age under the old system. And the old system is complicated. It has a basic component, but it also has additional layers on top. Things like the State Earnings Related Pension Scheme, which most people know as SERPs, and rules about inheriting pension entitlements from a spouse. Over many years, the Department for Work and Pensions discovered something uncomfortable. Hundreds of thousands of people were being underpaid, not by a few pounds, by significant amounts, sometimes stretching back a decade or more. The DWP itself admitted in 2021 that underpayments were caused by historical errors in how pensions were administered, particularly for married women, widows, and people who had periods of caring responsibilities. So the DWP launched a major correction exercise. They've been working through old records, identifying errors, and sending out corrected payments. That work is still ongoing. And this week, a new batch of corrections is landing in accounts. That's what's behind the larger than expected payments some people are seeing. There are four main groups who are most likely to have been underpaid and who may now be receiving corrections. Let's go through each one. The first group is married women. Under the old system, a married woman who had a limited national insurance record of her own could claim a pension based on her husband's contributions instead. This is called a Category B pension. Thousands of women were entitled to this uplift, but were never given it. The system simply didn't apply it automatically. When these women's husbands reached state pension age, the DWP was supposed to write to them and offer the uplift. Many never received that letter. The second group is widows and widowers. When a spouse dies, their national insurance record can be used to boost the surviving partner's pension. Again, this should happen automatically. Again, it often didn't. If you were widowed at any point and your pension didn't increase afterwards, it's worth investigating. The third group is divorced people. The rules here are more complex, but if you divorced before April 2016 and your marriage had lasted a significant number of years, you may have been entitled to use your ex-spouse's national insurance record to top up your own pension. Many people simply don't know this rule exists. The fourth group is people who took time out of work to care for children, for elderly parents, or for a disabled relative. During those periods, you should have received national insurance credits to protect your pension record. If those credits weren't applied, you could have gaps in your record that have reduced your pension for years. The DWP has been finding these errors and correcting them. There's also a fifth group, people who paid the married woman's reduced national insurance stamp between 1948 and 1977. If you opted into that lower rate, it reduced your own pension entitlement. But the rules about how that interacts with your husband's record are complicated, and many women in this situation are still receiving less than they should be. State pension is paid every 4 weeks, not every month. The day you're paid depends on the last 2 digits of your national insurance number. If your number ends in 00 to 19, you're paid on a Monday, 20 to 39 Tuesday, 40 to 59 Wednesday, 60 to 99 Thursday. So when you hear that payments are arriving this week, that applies across those different payment days. Check your bank account on your usual payment day and compare the amount to what you normally receive. If the amount is larger than usual, there are a few explanations. It might be a back payment, a lump sum covering underpaid amounts from previous years. It might be that your regular payment has been permanently increased because an error in your entitlement calculation has been corrected. Or it might simply reflect the April uprating, where pensions rise each year in line with the triple lock. If you receive an unexpectedly larger payment, don't panic and don't spend it immediately. The DWP will send you a letter explaining the change. Sometimes the letter arrives after the payment. Wait for it. If no letter arrives within 2 weeks, call the pension service on 0800-731-0469 and ask them to explain the payment. That last step matters. In rare cases, the DWP does make errors in the other direction. They overpay by mistake. If that happens, they will ask for the money back. It's much easier to confirm the payment is correct before you've spent it than after. Here's the thing the DWP won't shout about. Their review is not finished. They have not checked everyone, which means there are people right now who are owed money and have received nothing because their case simply hasn't been looked at yet. You don't have to wait. You have the right to ask for a review at any time. Start by checking your national insurance record. You can do this online at gov.uk by searching for Check Your National Insurance Record. Look for any gaps, years where it says you have no qualifying contributions or credits. Then think about what you were doing during those years. Were you working? Were you caring for someone? Were you claiming any benefits that should have come with NI credits attached? If you spot gaps that don't look right, that's your starting point. You can then contact the pension service and ask them to review whether those periods should have had credits applied and whether your pension should be higher as a result. You can also request what's called a state pension statement, a document that shows exactly how your pension was calculated. If something in that calculation looks wrong, you can formally challenge it. Don't assume that because nothing has arrived, everything must be correct. The DWP's own figures suggest the correction exercise won't be fully complete until 2027. That means millions of cases are still to be reviewed. If your state pension does increase, either through a back payment or a permanent correction, there are 2 things you need to be aware of. The first is other benefits. If you receive any means-tested support, pension credit, housing benefit, or council tax reduction, an increase in your state pension will affect your entitlement to those benefits. It doesn't necessarily mean you'll lose them completely, but the amounts will be adjusted. You are legally required to report changes in your income to the relevant authorities, usually within 1 month. Failing to do so can result in overpayments you'll later have to repay, with potential penalties on top. For pension credit, call the DWP on 0800-99-1034. For housing benefit and council tax reduction, contact your local council. You have 1 month from the date of the change to report it. The second thing to be aware of is tax. Your state pension is taxable income. If a lump sum back payment pushes your total income for this tax year above your personal tax-free allowance, which is currently $12,570, you may owe tax on the excess. HMRC will usually adjust your tax code to collect this automatically, but it's worth knowing it's coming so it doesn't catch you off guard. If any of this feels overwhelming, you don't have to navigate it alone. There are organizations staffed by people whose entire job is to help you understand exactly what you're owed. Age UK offers free, independent advice on state pension entitlements. You can reach them on 0800-678-1602. Independent Age is another excellent resource. Call 0800-319-6789. Both can help you understand your record, identify potential underpayments, and support you through the process of requesting a review. If your case is complex, for example, if you spent years abroad, or if you have a mix of employment and self-employment, or if you've been through a divorce and the pension sharing rules are tangled, you might benefit from speaking with a specialist pension advisor. That's a paid service, but a good advisor can often identify money you're owed that more than covers their fee. The most important thing is this: don't leave it. Pension underpayments don't expire, but the further into the past they go, the harder the paperwork becomes. If you think something is wrong, act now. So, to bring everything together, the DWP is currently sending out corrected state pension payments to people born before 1961. Some of these are back payments covering years of underpayment. Some are permanent increases to regular payments. The most commonly affected people are married women, widows, divorcees, and carers. If you receive an unexpected payment, wait for the explanatory letter, then call if it doesn't arrive within 2 weeks. If you haven't received anything but you suspect you might be owed money, check your national insurance record and request a review. And if your pension goes up, Report the change to any benefits you receive within 1 month. Your pension is money you've earned and contributed towards across your working life. Every penny of it belongs to you. Don't let paperwork stand between you and what's rightfully yours.